Good morning, traders. Welcome to the Dots Trader Morning Call video for Friday, November 20th. We did get a little bit of a pause day, and that's coming off at some two big days, guys. Monday, a big explosive day, and then on Wednesday, Tuesday was another pause day as well as yesterday. So where are we going today? Well, today is options monthly expiration. I don't see too much happening. We did call some sort of a low Thursday, Friday. We did get a real good push lower Sunday night after the horrific terrorist attacks on Sunday, but then the markets kind of recovered, and then we had that big move higher. FOMC talks that they will be raising rates in December. So that's all well and good, but I do see a lot of market divergence between the Russell and the transports. Now, we are day traders, but for those of you who are longer term, be careful out there. At any given moment, this market divergence could snap, and we can push lower. Now, we are into some seasonal strength in retail, some banks and financials, and, of course, transportation. So when that happens, you kind of get a skewed move, and it wouldn't surprise me if the transportation sector starts to move up, at least going into December. And then everything, all bets are off basically for January, February, and we'll see what happens. We'll do some longer-term analysis. What do I have in front of you? Well, I have the dollar ETF, UUP. Why? Very important. Been getting a lot of emails, and please send those emails. I love it. Why is it important? Well, a stronger dollar affects conglomerate companies, multinationals, right, that do business overseas, and our commodities. Well, we have a lot of people that like to trade commodities, gold, copper, grains, metals, oil. So it's really important to watch what UUP is doing. So UUP, if you don't have the dollar feed, you can use this, and I just wanted to show this to you on the Dots Trader. We have a nice bull flag forming and a big flag pattern here. Now, we'll pull back a little bit, which is okay, but if we can get down to these levels here, fill this gap, and we start to move higher, I think you're going to see lower prices in oil and actually commodities across the board. And I think you'll see a break of 1,000 in gold. Okay. Now, I think gold is going to be coming into a sweet spot. I'm not ready yet for it, but I will show that to you. Let's take a look at the GLD. We do have a double bottom here. I do like this for a trade, not to hold, but for a trade right now. Because, again, if the dollar breaks higher, then gold will break lower. Okay. So we want to make sure we're aware of that. Okay, guys? But right now, for a trade, I do like this for a double bottom. Look for a spot. Drop that down to a 5-minute chart or whatever chart that you that fits your time frame, and look for a sweet entry here to the long side. I do like it right now for a long trade. All right? Take a look at our indexes. Spiders, you know, that big bearish rising wedge we broke down. So we had 3 days down and 2 massive explosive days up, and we're back to where we were again. And this is how the market has been driven by the algorithms, the high-frequency traders. So the computers and the machines run our market, which is terrible, and it's very sad that traditional style of trading is gone now. So you guys need to be adapted and understand how to trade this type of market and environment. But anyway, we are back up in here. Like I said, guys, I don't see too much movement today. I think it should be pretty much of a boring day, aside from any news coming out of Europe, obviously. But I'm really looking forward to next week, because after next week, we're going to see if this market has any more legs. That's my main objective here. This week is usually skewed with a bullish bias because we have monthly options. Okay, take a look at Spider 60-minute. You can see that nice bear flag. We call that bear flag. On the daily chart, was that a bull flag? We didn't know, but then when we saw this bear flag pattern, we said, nah, you know what? We're going to stick to this bearish pattern call. Sure enough, it worked out really nice. Now we're here, and we're stuck in this area. And again, guys, just kind of chopping around. IWM, remember I mentioned watch. Be very careful here because our secondary leader is not leading. It's actually lagging, and this is a bad omen. I do not like to see this because Russell 2000, a great gauge of risk, and also tops and or bottoms a couple of months before equities and all the other indexes that I've shown you. So please be careful here for you longer term, guys. Transports, nice big symmetrical triangle. If we break out, and I have no problem with this, and we continue to break out and take out that 200, and then look for that next pullback. If we get a next pullback, let's say it's here, and that'll be a higher low from this, and then from this and this higher low, then guess what? Then I think all bets may be off that we are headed lower, and this market divergence has now reverted to the upside. Okay, and then that would help our rally if we're looking to push beyond 2200 in the ES. Okay, take a look at the Qs. Lastly, the Qs, and you can see fill the gap. And again, guys, I've mentioned many times, just watch the top 10 holding in Qs. If you really want to know where direction's going, look at the top 10 holders. They're the ones that are pushing around this index, all right? Guys, have a great weekend. Enjoy the a long weekend. And be careful on today, just in case, because we could get some chop here today. Speak to you on Monday. Take care, everybody.